Hi, good day, traders. Welcome to Trade City Academy. Welcome to my YouTube channel, guys. Today's video, I'm going to be talking about the A to Z of Binance futures trading interface. Now, I know we're in a bear market and a lot of people are longing in to short thin the market. So many of them don't really know how to trade futures. So I came up with this video to help everyone in this theory. So guys, please, if it's your first time of visiting my channel, please do well to subscribe, share to others, like and comment on the videos, and that will help us grow the channel. I always say if I give you content, what I ask back is your subscription and your like on the video. Thank you guys. Please, finally, I'm not a financial advisor. Please, if you will need financial advisory, do where to contact a financial advisor. Always consider my videos as just educational purpose. Thank you. Let's get back to work. Now, guys, the difference between futures and spot can be gotten from my video on crypto bootcamp day one. Yeah, I think I did a lot of explanation about it too. You can go over the video and watch it again. But what I would just say is in futures, it's an agreement between two people. Just like me paying for rice ahead of December. Why am I paying for rice, a bag of rice ahead of December? It's because I believe by December the price of rice will shoot. So I pay ahead. So what happens is if by December the price of rice goes up as anticipated, I win. Now it means if the bag of rice goes down against my anticipation in December, I will lose. So futures, you do not own the asset, but you trade the price increase or decrease of the asset. But in spot, you own the asset. So in Binance, you buy on spot and you trade on futures. So first thing first, this is futures. We have two types of futures on Binance. Basically, we have the USDT N futures and we have the coin N futures. The difference is the USDT pairs against USDT, that's stables, and the coin is pairs against coin. So the next thing is this is Binance, this is BTC, this is BCH. All these are other contract I can trade. When I say contract, is features. So called features contract because it's an agreement. So I can trade this. This is a chart for BTC, this is a chart for BCH, this is a chart for Ethereum. So these are styles. It's like my favorite. So you get these on Binance even without you making them one. Now, guys, another difference between spot and futures is on futures, you get to see BTC USDT, but on spot, you get to see BTC slash USDT. So on spot, we should have BTC slash USDT, but on Binance futures, on futures rather, you will have BTC as against USDT, no slash. This is the percentage decrease and increase across board. Now, the next thing you need to understand in futures, which is a contract, it can be two. There are two types of contracts. We have a contract that has expiration and we have contracts that do not expire. So we have a contract that can expire after 6 months, after a quarter, after a year, and we have contracts that do not expire. You can choose to leave the contract. So you have the option of closing down or walking out on the contract. That's one. So for Binance, if you see perpetual has no time bound agreement. So I can decide to walk out of the contract anytime, any day. Why am I using contracts? So some people don't get confused. Let's go back. For perpetual means I can decide to close a trade anytime, any day. But for any other trading, let's say futures, if you get to see, for example, if you get to see quarterly, it means that trade can only run for a quarter. So let's say, for example, we have BTC, USDT quarterly. It means that trade can only run for a quarter. So at the end of the quarter, irrespective of my position, current position, the market will close either in loss or in gain. But in perpetual, the market will just be going till I'm tired. So perpetual futures can run for 2, 3, 4, 5, 6, 10 years, while a quarterly or expiration futures can run for the stated period of time. So it can be 1 year, it can be quarterly, depending on the exchange. So guys, the difference here is there's what called mark price and there's what called last price on Binance. Now, this is the last price. This is the last traded price here on Binance. You can see it's changing per second. And this is the mark price. Now, there is a difference between this and this, if you notice. There's a difference between the mark price and the last price. The difference is this is almost instantaneous. It's changing instantaneously. And this is determined by Binance alongside other exchanges. So it's like an algorithm they use to maintain the price. Now, the reason why they are bringing in mark price and last price is because there might be some market manipulation in a particular exchange. So to ensure that the price is fixed, they try to, let's say, work together with other exchanges so that we can have a fixed rate. And that price comes here. This is the mark price. So what they use in calculating your liquidation is the mark price, not the last price, because this is the last traded price and it's changing per second per second. Why this is determined in consideration with other exchanges. Okay, now we have funding rate and the countdown. This is the countdown. A funding rate is time. A funding rate is trying to compare between the price of Bitcoin, for example, on spot and also on futures. So they try to ensure that the two prices matches almost remains the same. So you get. So because of that, they use the funding rate. Now the funding rate is determined by a countdown time. So after, let's say, after this minute, after this time elapsed, this rate will change. And another thing you want to all know this, the funding rate is P to P. That means it's paid by traders, buyers and traders. And most of the time, people who are long in the market tend to pay people who are shorting. So this is more like a charge. This is more like a charge you get to pay. So people who are buying most of the time tend to pay people who are selling. This is 24 hours change. This is it. 24 hours high for BTC, and we have 24 hours low for BTC. This is the time frame we know about this on TradingView. I've explained it, mark price and the last price. Then if you want to go to TradingView, you can come here, but I prefer having TradingView on my chart, so I don't like using the one Binance gives me. So I can quickly buy and I can quickly sell. Now in Binance, we say in trading rather, when we say buy, we can also talk about long, and we say sell and talk about short. So you have buy long and we have sell short. So you can buy long and you can sell short here. Let me remove it. So this is my chart. This is my chart. This is what I will use to either buy long or to either sell short. This is it. I use to either buy long and to either sell short. Now this is indicator zone. So I can remove the indicator zone. If I don't like it, I can choose to remove it and it's off. So I have a plain chart. I am a technical price action trader. So I like using my chart, explaining based on what I'm seeing, what history tells me. Okay, this is where if you are trading, you're longing or you're shorting, it's going to be displayed here. So we have symbol, that's the coin you're trading, the size, where you entered, the mark price that was used to calculate where you entered, your possible liquidation price, your margin ratio, your margin as at the moment, then your profit and loss way of calculation. That's your return of equity, ROE. And this is to close the position. So let's assume I decided to long BTC. You will have BTC USDT here. The size of my trade will be shown here. My entry price will also be shown here. My mark price as well. The same thing we have in our future, our spot orders is what should appear here. So here is your percentage in profit or in loss. You get to calculate it. You see -2, 5, 10, 3, 20%, as well as plus 50, 60, and 80%, depending on your profit and loss. So this is my order book. We have sellers here and we have buyers here. And these are trades that have been executed. So these are trades that have been executed on Binance. The time is also alongside of it. Now, what you do when you place to buy, if you see a lot of people buying this, you see somebody wants to buy 1.6 BTC, those things, sometimes they accumulate people's order. So let's say I want to buy 0.04 BTC and I look for 0.04. Sometimes they just compound my own and some other persons will accumulate it, and you get to see somebody buying this. So there's an algorithm that does this for you. You don't have to do it, the system does it. This is for people who are selling and the quantity they are selling. Okay, so let's go back to this place. So here, I'm going to be explaining a lot of things here. Here we have two types. We have two types of trading here on Binance. We have the isolated and we have the cross. So if I click it, it takes me to the cross and isolated. Now the difference between the cross and isolated, in cross, I have two accounts. Let's say, for example, I have a bank account I'm using for savings. And know when you're saying savings, you're saving for a particular target. So I have an account I'm using for savings. Then I have my account B, which I'm using for spending, day-to-day running of my activities. Now, what happens is, let's say I wanted to spend 100,000 in a month. So I am not touching my savings. So before the end of the month, if I exhausted my 100,000 and the month has not ended, what happens is I will need to fall back to my savings to pick up some money just to sustain myself for the remaining days of the month. Let me repeat. I have a savings account, that's account A. Then I have a spending account, that's account B. What happens there is I intended spending 100,000 for a month. But as at 20th, I have finished spending my 100,000 and we have about 10 days left to end the month. What happens is I might need to fall back to my savings account just to borrow some money from the savings account so that I can complete the remaining 10 days. In cases like that, that's what happens when you're choosing cross. So let's fall back to Binance terminology. In cross, I have $1,000 on futures, but I decided to use $500 to enter a trade on BTC USDT. Now, if the trade went against me to the point that I've lost almost my $500, that's liquidation point. So as I don't close in loss, Binance will automatically fall back to that my outstanding balance of $500 just to sustain the trade. So ideally, my trade was supposed to end after $500. But since it's on cross and I have a standing balance of $500, I can be against minus 600, minus 700. So they've started taking from that my saving just to sustain me in the trade. So if you choose cross, you're giving Binance that privilege, that permission to switch to your savings just to sustain the trade if it goes against you. But if you're choosing isolated, you're telling Binance, no, man, if I risk $500, please, if I lose all $500, close it for me. Do not encroach into my savings. That's just the difference between the two. Now, the next thing I quickly want to explain is leverage. Now, leverage is very risky. Leverage is amplification of the amount you have, is the amplification of your capital to trade a particular trade. Now, the volume of what you're trading, the volume of what you're trading is minimal, is very low. So most of the times, you need a higher leverage for you to make significant profit. So let's say, for example, I have $100 and I'm using 1x. Let's say I'm trading my normal $100. 10% might not even give me something tangible. So because I want something bigger, I need to amplify my account by setting leverage. And that leverage is chosen based on your risk or your greed level. So if I choose 50, it means I am amplifying my profit or loss times 50. So you will now do 50 times your capital. That is how the account, the platform sees your trade. So the higher the leverage, the higher the risk. So what I advise is please trade within a certain acceptable leverage based on your risk and reward ratio. Anything above 20 is gambling, personally though. But this depends on your lot size. Sorry, it depends on your capital. If I have a $10,000 account, I can decide to lock with 50,000 with 50x. But if I have, let's say I have a $100 account and I'm longing with 50x, it's risky. Any small move I might be off. So the higher the capital, the higher your risk. It's vice versa. I do not advise anybody go above 20 unless you're gambling. Sometimes we do gamble and it does pay off. Sometimes you lose, you cry, and you continue trading. Okay. Now I will not be explaining all of these orders but I'll just do quick recap on it. Now we have limit order. Limit order is, come on guys, BTC is currently trading at 29,920. That's limit order. But I believe that BTC will fall to 27,000. So I don't want to buy now, because if I buy now, I'm buying high. So what I'll do is I'll come here. Since I believe it will fall to 27,000, and I'll write 27,000 here. What have I done? Then I'll put the size of BTC. Let's say I'm buying one BTC at $27,000. I will choose, let's say I'm using 50% of my capital, or 100%, or 75% of my capital. You can also reduce it. Let's say I'm using 50%. I'll click on buy long. Once I click on buy long, what that means is my trade becomes a pending order. It will not be executed instantly. Reason being that I want to buy when the price falls. I want to buy when the price falls. Some people do not buy rice in December. They wait for February, March, that time, because they know the price of rice will fall. That's what I'm trying to do. So it's a pending limit order, is a pending order you use. If for more knowledge on pending order and instant orders, also go back to my crypto bootcamp trading. On day one, I did an explanation on that. So if I'm using limit, I set my limit and I click on buy or sell. Now, if I'm using market, it means, guys, I just want to get into the market immediately. I don't mind what's happening. Just give me the price now. There's no time. Get me in the market. Get me in the market. If you're using market order, it means you will buy at a blind price because you don't know how much you bought. So you just buy before you know you're in the market. So the market can actually cheat you. By cheating means they can give you something above this. They can give you something above this because you're very fast. You're not patient. You just want to jump in. So you buy blindly. But for limit, you choose where you want to buy. Now for stop limit is another order you determine where you want to buy and also where you want to leave the market. Now we also have stop market too. Stop market can also be used to determine where you want to buy and where you want to leave. Now the difference for stop limit, and stop market here is there's something significant about this. Now you put your stop market where you want to buy and put the price you're buying. Now, if you come here, remember I said something about mark and last price. This is the mark price, which is what I've stated, and this is the last price, which is this. So you can use either of the prices. But guys, to be on the safer side, people mostly use the mark price. Remember, mark price is more stable compared to your last price. So you can use any of these orders. For more information, please, you can go back to my bootcamp training where I did explain all of this. Because of time, I might not go detail to explaining trading stop loss, that's trailing stop, and also post only, as well as TWAP orders. So this is your account side you're willing to risk either 10%, 25, 50, as well as 100. Now this is your take profit and your stop loss. So let's say, for example, I am buying with limit. This is my limit price. Let me say I want to buy at 28,000 on the dot. Buying 28,000 on the dot. So my take profit should be, let's say 30,000, for example, 1, 2, 3. Now my stop loss should be 26,000, 1, 2, 3. Now, the moment I do that, I click on buy long, boom, it goes to a pending order. Why is it going to a pending order? Because this is it. The last price here is 28.3, 28.850. So it must get to 28,000 on the dot before it can be executed. Remember, I'm using last price. This is it. This is it. So this is my last price. So this is my stop loss. Stop loss means get me out of the market in case it goes against my direction. Therefore, my strategy, my entry was wrong, and I want to minimize my risk and get out of the market as soon as possible. That is what we call stop loss. Take profit is, guys, I don't want to be greedy. Please just give me this profit and leave the market because the market is not my own. do that on your take profit and your stop loss. You can set it before entering the market. I can also modify your chart, sorry, your trade after you entered the market. Now, guys, another thing is reduce only. For reduce only, you state the quantity of that's, let's say, for example, I have 2 BTC and I'm deciding to use just 1 BTC. If it's on reduce only, it means I cannot go beyond the 1 BTC. I cannot trade beyond 1 BTC. So anything I'm going to be doing will be below this. So the market will not allow me to trade above what I want because I've stated it, okay, I can only trade below, that's reduced, and not above. So if you click that, it means you're authorizing Binance to limit you to that too. Some people use it, while some will not use it. So this is your margin ratio. It does shows here. Once you're in a trade, it shows you where you are, the current margin, your margin ratio, your maintenance ratio, what is needed to keep you in the trade. You get to a particular point, Binance should send you a mail proud to your liquidation that, bro, you are about getting back to the market, fund it. But at times, before you get the love letter, you're already off. Ideally, you get an SMS, you get an email. So you quickly need to fund your wallet just to keep on the margin. Okay, so basically that's that. Have I been able to do justice to that? One last one. So if you come here, okay, let's go here. Okay, now this is what called the futures calculator. I want to know my risk as against my reward for a particular trade. Guys, bear with me. Let me switch to BNB, Binance Coin. I like using coins with exact value. So we have BNB here. So I'll come back to my Binance calculator. Now I want to know my profit as against my loss. Now, where did I enter BNB? Look at the price here, 302. So let's assume I bought BNB at 302. Now, where do I intend leaving the market? Let's say I want to leave the market at 315. How many BNB did I buy? So let's assume I bought, the quantity was 2. And I want to calculate what will be my profit against my loss. Now, guys, look at it. This is my margin. This will not be my margin. My profit will be $26. And my return of equity will be 86%. So that means at 86%, I would have made $26 with this. So you now know that, okay, if I have 2 BNB, this is my leverage I'm risking, and I'm getting to make this. This is what I should be getting. So let's try to see something like this. If you look at it, this is my return of investment. That's 193. So I'll be making 193% if I am to increase my leverage. So let me increase again. It keeps increasing. So guys, always bring your leverage down 15 and you have 66%. Now you can also do the same for short. Let's say I'm shorting, I entered here and I'm leaving at 280. I use 2 BNB. I'll be getting 109. That's percent, that's return of equity. And that should give me about 44%. Okay, guys, the next thing is your target price. I want to know what will be my target price. So I entered BNB at 302 and my return of investment, let's say 80%. What will be my target price? My target price will be 314. So for me to make 80% of this trade now, I need to put my target price, that's my exit, my take profit at 314. So at 314, I would have made 80% with this calculation. So let's go back to liquidation. Liquidation also is almost the same thing. In liquidation, where is my entry? I enter at 302. How many BNB? I used 2 BNB. My leverage is still here. What was my balance? Let's see, my balance was, let's say, for example, $600. $600. I'll calculate it. This is my liquidation. So you see, this is my liquidation. It looks so ridiculous. So let's say, for example, I'll come up here again. Let's say I have two. Okay. So if my balance was $200 and I'm going this by 399, I should be off. So liquidation can also be calculated for you by Binance as well. So guys, the basic things is your profit and loss, your target price, your liquidation, or which I've shown you how to do it. You can also do for short too. The same thing apply for here. That's exit. You can also do your short and your long as anticipated. Now, guys, this is very important because it knows it gives you, let's say I give a signal that we are longing BNB at 302 and we are anticipating to make 50%. And I want to know 50%, where will I be leaving the market to get 50%? It means I should be going with 309 by 309. Come on. I should be getting 350% with 20x. That's what it means. So it's just a slightest move. Just small move. I should be making 309 and that should give me 50%. Let me go to 75%, 304 with this leverage. Let me go to something like this. 339. So the lower your leverage, the lower your profit goes. That is how we use that. Okay, I believe I've been able to explain this for you, especially for beginners, and I don't think I am forgetting anything so far. So good. I've talked about other book. I've talked about the difference between USDT, the coin, and the USD futures. Coin uses the USDT, that's the stable, and USDT use the stable coin, while the coin use any of the cryptos. As well, I've told you about expiration and perpetual contract, and I've told you about the difference between spot and futures. We have the slash for the spot, and we don't have the slash for futures. Told you about mark price and last price, orders, and how to trade your market. So guys, please, if this video has given you content, please go ahead and click on the subscription button, subscribe to the channel, and see you next time. Have a nice day. Tracy.